Hey everyone, Joe Bladdick here, and we're going to talk about the interest rate announcement today. We have some big news coming out of the Bank of Canada. We've seen them make an announcement this morning at 9:45 a.m. that, to be honest, was not very surprising, but we're going to cover it off today in this episode of Canadian Mortgage Weekly, number 188. I'm streaming to you live today from Muskoka, so I hope you enjoy the views behind me. I'm sitting on a Adirondack chair and just enjoying myself here after reading the update here from the Bank of Canada. And like I said, it's not very surprising. You can actually feel free to read the entire update if you'd like, but I'm going to summarize it for you today. Essentially, the Bank of Canada held the rate at the overnight rate that is currently at 2.75%. And what that means is that prime rate is actually going to remain at 4.95% for Canadians. Prime rate is the rate that a lot of the banks and mortgage companies use to lend their mortgages on. And prime rate is what the interest rates are essentially based on in Canada. So 4.95%, it's not really a low rate comparatively to the last few years. However, it is a pretty decent rate now, since rates have dropped slightly since the peak of rates. Some of the reasons that the Bank of Canada held rates at where they are now, which is 4.95% of a prime rate, is simply because they believe that inflation still remains to be a concern in Canada. They believe that inflation is still a sticky subject. And when I say a sticky subject, we've seen inflation that is reported to Canadians drop below 2%. It was at 1.7% in May. It was at 1.7% in June. And in July, it reported itself at 1.9%. So it's gone back up. And the Bank of Canada uses something called the Core Price Index. And it's more of a comprehensive inflation number. And that inflation number is higher, actually. And that's reporting at 2.9%. So that's a higher number. And the Bank of Canada is still concerned about inflation going forward. It's pretty sunny here today. Weather's been gorgeous this week, by the way. Anyway, inflation's pretty sticky, 2.9%. They're really hoping to get that number closer to 2%. So until that happens, rates aren't really going down aggressively anytime soon. Another item that they brought up today during their meeting is that growth is still pretty slow in Canada. The GDP actually went down in the last quarter, which is very concerning for all Canadians. Well, we should be concerned. It went up slightly in the first quarter, but down in the second quarter. So means our economy is not really growing as strongly as it was in the first quarter. And that makes sense. I've seen a lot of Canadians come to me with their mortgages, say that they're struggling a little bit more. They need some help. Their debt load is accumulating. They need to use their equity in their home and refinance it to get some of the equity out to be able to use it for debt pay down. People just aren't affording as much as they did. And inflation and economic growth has a lot to do with that. So economic growth has slowed in the second quarter. So that really didn't help with the Bank of Canada wanting to keep rates where it's at. But because inflation remains sticky, they didn't make any moves. It seems like, in my perspective, that a rate cut is still on the table. However, we could still see a rate cut towards the end of this year, September, October, maybe even later this year. We might see a rate cut still, but it didn't seem like a rate cut was on the table this time around. And that's interesting to me because on top of all that other data, we did see unemployment go up again this month. Believe it read at 6.9%. So with unemployment up as well, we're seeing some pressures really point towards a rate cut in the future, especially if these trends continue. And I know unemployment's been trending upwards since last year. We've seen unemployment go up quite considerably since last year, and it continues to trend upward. If you're just joining me here today, my name is Joe Bladek. I'm a mortgage broker in Ontario, Canada. Been a broker now, been doing mortgages for 14 plus years. I'll be celebrating 15 years next month. And just streaming live today from Muskoka. Weather's beautiful. Sitting on an Adirondack chair. It's pretty nice. Maybe I should sit back like this. And if you're just joining me here, the Bank of Canada did decide to keep rates where they're at today. Prime rate is not moving. It's going to continue to sit at 4.95% going forward. And we were just talking about how some of those reasons that the Bank of Canada made that decision are interest rate, our inflation rates, which remain at 1.9%. It's up from last month, it was 1.7%. And the Bank of Canada inflation rate that they monitor is 2.9%. So how does this affect your lending products? Some of the mortgages you have, how is this going to affect your line of credit? How is this going to affect your car loans, your consumer loans? How is this going to affect your credit card lending? And how is this change today going to affect your mortgage, essentially, or your home equity line of credit? And your home equity line of credit actually is sitting now at a prime rate of 4.95%. It's not changing. The rates have stayed the same. And because of that, the line of credit actually will not change. There will be no change to your minimum payment. There'll be no change to what's required of you. There'll be no reduction of interest rate, no increase of interest rate. It's just simply staying the same. And if you're concerned about your mortgage and your mortgage payments, your mortgage payment will stay the same as well. With rates staying the same in Canada now and continuing to be at 4.95%, we will not see mortgage payments move. It will stay the same. Going forward, we will see that remain until September when the next rate announcement happens. There also was some comments about the US and the influence they are having on our economy. The Bank of Canada did mention that the United States inflation has been growing, prices have been increasing in the United States because of tariffs, and because of that, we are seeing Canadian prices be affected as well. And as that continues to marinate in the economy and influence prices going forward, we will see those impacts continue to affect Canadians over the next few months to the next few years. And that could be a concern for sure, as a lot of Canadians are hoping that interest rates will go down in the future so their mortgages can have a reduction in cost. I personally hold variable rate mortgages, and I would like my mortgages to go down. And I'm really hoping for that rate cut in the late of 2025. Bank of Canada has left that on the table, with the rate cut still possible in late 2025. But as I mentioned, if you're just joining me here today, there's no rate cut today, and rates have remained the same. Prime rate sticking at 4.95%. The Bank of Canada overnight lending rate sticking at 2.75%. And we will not see any updates for interest rates now until September. And we will possibly see a rate cut in September, depending on how these next few months materialize. Bank of Canada is watching inflation in Canada. Bank of Canada is watching unemployment, which both have gone up. Inflation going up really doesn't help interest rates going down, but unemployment going up does. And they're watching the U.S. impact with their economy and the tariffs and prices there. Again, my name is Joe Bladek. I'm a mortgage broker in Ontario, Canada. Streaming live today from Muskoka. It's beautiful weather here today. If you can guess where I am and put that in the comments, you know what? If you can guess where I am today, put it in the comments. I would love to hear some of the guesses. Give you a hint. It's in Muskoka, and if you can guess where I am, I will. I'll reach out to you and we'll send you a $25 gift card. And thanks for watching today. My name is Joe Bladek, and if you have any questions about your mortgage and how the interest rate announcement today impacts you, please reach out to me. I would love to chat with you about your mortgage. And again, if you can guess where I am, put it in the comments. First 3 people that guess where I am correctly will get a $25 gift card. Anyway, thanks for watching today. Join me next time on the next rate announcement coming up in September of 2025. We could see rates chopped down at that point, but as of today, there has been no change for interest rates, and we're still at the same place. All right. Hope you have a great day.